Still on agricultural commodities, let's turn to something you and I probably consume every day: coffee. Coffee exports in Kenya have gotten off to a fairly strong start in the first 6 months of 2025. Between January and June, the country exported nearly 37,000 metric tons of coffee worth over $270 million. Export volumes and export earnings rose by 44% and 84% respectively compared to the same period a year earlier. Now, in contrast to that, the tea market slumped in the first half of 2025. Export volumes are down by around 2% to just over 315,000 metric tons. Export earnings, however, fell by double digits, down 12% to just under $700 million in the same period. We'll explore that production glut there in a moment, but let's get back to coffee for the time being. It's important to put that rise in coffee export earnings into context. Since the start of the year, Arabica coffee futures in New York have gone up by nearly 30%. But Kenya's missed out on a windfall here in a massive way. Its coffee output has fallen dramatically from peaks of around 129,000 metric tons in 1988 to under 45,000 metric tons just last year. And that's not the entire story. Yields per hectare in 1988, they range from around 0.7 to 1.1 ton per hectare. At the moment, the national average yield is around 475 kilograms per hectare. So then, to explore developments in the coffee market and the issues plaguing coffee production in Kenya, I spoke to Martin Ochieng. He's the managing director of one of the large listed agricultural firms in Kenya, Sasini. I started our conversation by asking him if he thinks that this current price rally still has some ways to go.
We've seen the futures drop marginally in the last few months in terms of projections. So we expect it to drop slightly into the next season.
Given where Sasini is, you've got four main product lines, right? There's tea, there's coffee, there's macadamia nuts and avocados. Can you give us a rough sense of what the split is like in terms of revenue and profits between those four commodities and where coffee fits into that broader picture?
Yeah, it will be very rough because it varies from season to season, but generally tea is our biggest business and has been traditionally for a long time. In a good year, when every crop is performing, tea contributes between 40 and 45% of our profits. We really don't worry about revenue because that's dictated by so many other things. The volume of the produce you have and the export of that volume. What really matters is the commodity price that year. And so what flows to the bottom line is really dictated, because the volumes tend to be stable, is really dictated by the returns that you get from a proceeds perspective in terms of pricing. So tea gives about 40 to 45%. Coffee gives us about 30%, and the other 30% is split between macadamia and avocado.
You've spoken about the quality edge that Kenyan coffee brings to the market. Now, in an environment like what we have now, we've spoken about the supply issues in Brazil and in Vietnam, but then we also have all of these other exogenous factors, exogenous shocks that come in, like the 50% tariff that's been slapped on Brazilian coffee. When the trade environment is as complicated, shall we say, as what we're seeing now with these sort of tariffs coming into effect, does that then have an impact on the price and the uptake of the product comes out of, say, Kenya, Ethiopia, Uganda?
It will have an impact on the landing price in the US if you're talking about the US tariffs. So any country that is imposing tariffs on a source market for any of these commodities. So what happens is, if you load on to the normal cost of production and transport of produce into your market, other tariffs that are not originated from the production markets, then you're saying that those tariffs need to be transferred to the end consumers of those produces, of that product. And so, countries have the freedom to do what they want with how they import, how to protect their local farmers or local industries. But tariffs generally need to be thought through in a way that it doesn't affect the flow of goods and services, and especially goods for food consumption, into markets where they are needed. And so, we haven't seen the effect of that yet. There's been a lot of talk around different markets being affected by the different levels of tariffs from the US government. We are working very closely through our client relationships in the US, but also through government bodies here to ensure that whatever has been traditionally going to the US continues to go there.
And Kenya is facing a 10% tariff for its exports into the US. That's not going to eat into your margin, is it? Can you pass that along to your clients?
That's the goal. That's what we are working on. It's ideally you don't want that to just be passed on to the producer, because in some cases that's your whole margin. And so if you remove 10% from your margin, then you start asking yourself why you're doing that business.
The tea side of the business, I know you flagged this in last year's annual report, and you pointed out that there's been a surge of supply in the market, especially over the last 3 years from 2021 onwards, and that flipped the market in favor of buyers rather than producers like yourself. Is that still an ongoing problem, or are we making progress in trying to clear that glut of supply in the market?
There is progress. It's slow though. So maybe to give you context, that the accumulation of tea from about 3 years ago, when the country instituted a minimum level of buying tea per kilo in terms of pricing in US dollars, meant that the buyers who couldn't pick up that tea at those elevated prices just didn't buy the tea. And so there was an accumulation from all the producers, especially the small scale producers in the country. And so that tea accumulated to levels where what we're offering in the auction on a weekly basis was double what is normal. And at some stage last year, that was a real problem. It continues to be an issue, but it's getting better. The agency that runs small-scale farming of tea and trading of tea in this country has done a lot of work to try and reduce that glut. It's still there, though. And the effect of that is collapsed prices in the auction or depressed prices that are not really lifting where they should be. And tea has the extra challenge of being a crop that is produced every day. And so every week, there's a certain volume that is presented in the auction for purchase. And if that doesn't get picked up, you then are slowed down by the efforts you put in place to manage the glut that comes from the past. And so we have to be very careful that we not only control our production, because I think we do need production to support that economy or that part of the economy, but we do need policies that are friendly to ensure that that production is converted into black tea and is converted, more importantly, into sales and volumes that go into the export market the way they've done traditionally. It doesn't benefit the country to have more tea than it can sell.